The Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
1490 WGCH. This is Carrie Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote. If you think the world's collapsing around you, if you think that nobody knows what they're doing, and you're wondering, is there a voice of sanity or reason? John Rubino of dollarcollapse.com. I wouldn't say he has the answers, but he's got the right questions. Hey, John, welcome back to the Financial Survival Network. It's been too long.
Hey, Carrie. Thanks for having me on.
Hey, always a pleasure. Always good to hear your views. We faithfully read dollarcollapse.com. And it's one of our go-to sites, and we're always reposting your stuff up on financialsurvivalnetwork.com.
Oh, great.
So Europe, question, are they going to just double down on failure and just become one political entity, one financial entity, or is the thing going to blow apart?
Well, that's basically their two choices right now. You know, the euro was designed with such egregious flaws to begin with that it's not fixable under the current system. They originally set it up as a monetary union where everybody had to operate using the same currency under the same monetary policy, but not a fiscal union, so that all the constituent countries kept control of their taxation and their retirement plans and their military spending. And so you've got all these huge imbalances out there where the peripheral countries have just taken advantage of very low interest rates back mid-decade and borrowed way too much. And now they've got all the traditional debt-related pathologies. And so they're not viable under this monetary policy because the normal response to borrowing too much money for a small country is to default or to devalue dramatically. And these guys can't do that, so they're stuck. And so either they leave the Eurozone, devalue dramatically, and you go back to their old currencies, or they stay in the Eurozone under a fiscal union in which Germany gets to decide what Spain's military budget looks like and its level of taxation and what its retirement plans look like, among other things. And I think neither one of those are palatable to most Europeans, but that's the only two choices that they have now. So they're hashing out, kind of a lesser of two evils argument right now. And more than likely, they'll come down on the side of fiscal union because that's less disruptive in the short run. To have Greece and Spain and Portugal and Ireland leave the Eurozone would cause banking runs everywhere and force capital controls on a lot of these guys. And their devaluations would bankrupt the big core country banks who have lent huge amounts of money to them. And so you get a continent-wide depression as a very real possibility. And they want to avoid that at all costs. So they will probably try some kind of fiscal union, and which kind of means that, Germany gets to run Europe after all. Their World War II aim has been achieved basically financially through the euro, and which kind of raises an interesting question. The design flaws are so obvious in retrospect, and the question then is, did they see them when they set up the Eurozone, and was this foreseen, and was a fiscal union with Germany basically in charge the ultimate goal of the euro in the first place? And who knows, because nobody really knows what went on behind closed doors. But it's an interesting question because it's hard to believe this happened by accident.
Yep. Yeah, well, it certainly seems to be working out that way. I think, though, that the idea of when they start surrendering sovereignty, which is what we're talking about, once you can no longer decide your own defense, your own social welfare programs, this and that, and you give up control to unelected officials in Brussels or in Berlin or wherever they might be lurking, and then that external authority starts putting fiscal constraints upon your country, you're going to get pretty close to revolution here, as if we weren't already close now. I mean, look what's happened in Greece and Spain, and they've been burning down the banks. In Spain, you look at that and you say, oh my God, what have they done here? What is going to happen here? And it's a little bit scary, isn't it?
Oh yeah, and chaos is a real possibility here because the peripheral countries in Europe are in depression now. Their unemployment levels are as bad as ours were in the 1930s. Mm-hmm. And the difference being that we had control over our own destiny. We could at least try things internally that might work or might not work, but we could try things. They're stuck. They can't devalue their currency. Because they're using the euro, which remains a reasonably strong currency, even though it's down lately. And they can't control monetary policy because the European Central Bank is in charge of that. So if you're in Spain, you have no alternative if you're going to stay within the Eurozone, but to try what they call internal devaluation, where you cut your labor costs to the point that you become competitive again. And that basically means throwing people out of work and dramatically lowering the income of people who still do have jobs. And in general, that creates so much anger that it becomes like a powder keg. Things could blow up at any time when you've got 25% of the population out of work, 50% of people under 25 out of work, and no prospect for improvement. And in fact, it continues to get worse. Unemployment continues to go up in these countries. So political chaos is a real possibility here, which means they have to act soon. The people in charge of Europe right now feel a legitimate sense of urgency because they know this can't go on much longer. It's only getting worse. So if unemployment's going to hit 30% in Spain by this time next year, they need to do something now while it's only 23.7% or whatever.
Yeah. Well, yeah, sure.
Yeah. And so it comes back to, let them leave or take control of their economy. And, if they try if they try fiscal union, then one crucial component of that is going to be a massive devaluation of the euro, because at the Eurozone level, they can devaluate, they can manipulate monetary policy. And this is the response almost universally of countries that borrow too much money. You cut the value of your currency in order to lower the amount of real value that you have to give back to pay off your debts, and you gain an advantage in the global trading markets with your trading partners if you have a cheaper currency. And so Europe in general will have to do something like this pretty soon. So which brings us to Jim Rickard's currency wars scenario.
Exactly what I was thinking.
Yeah, and that's really where we're headed, because the euro is already dropping, the dollar is already soaring, and look what's happening here. As the dollar goes up, the U.S. stock market tanks, and that's that's a normal relationship, because the dollar going up hurts our export companies, and they're basically our most healthy companies, our big multinationals that export a lot to the rest of the world. And so if we're going to hurt them because the dollar goes up and their value is going to go down, then our economy is going to shrink. So we're being hurt via the European devaluation part of this currency war, and that means we have to respond. So we're going to come up with some kind of new quantitative easing or that by some other name very soon, because we don't have much of a choice. And the net effect will be to force the value of the dollar down, which negates Europe's advantage by forcing the euro. And it's going to go on and on until at some point, most fiat currencies lose the faith and the confidence of their countries and of the global financial system. And we see a repudiation of paper money as a concept. And that's out there somewhere. And that's the real crash. What we saw in 2008 and what we're seeing now are foothills on the way to the mountain. And the mountain is when the world loses faith in the dollar and just doesn't want it anymore. And then we lose the ability to borrow money to finance our deficits and have to live within our means instantly. And that means cutting, government spending in half, which is 7% of GDP. Boom, just gone. Yeah. And that means we're in a depression. And so it's out there, there's no way to know when it's happening, but the numbers basically make something like that inevitable. and it could be sooner rather than later.
And I would argue that we've been in a depression since '08, arguably starting in '07. And just like during the Great Depression of 1929 and on, nobody knew we were in the Depression for quite a while until all the banks started closing. Then it kind of dawned on them. And that was in 33. So it's 4 years after the stock market crash in 29. And then all the real estate went down the tubes. And then it just cascaded. And the fact is, the only way to prevent this stuff is by cutting back the government spending and cutting back on taxes and getting rid of the roadblocks to business formation, because people always point to 1920, 21, and Harding was our president then, and he wasn't taken seriously by a whole lot of people, and he died shortly thereafter. But we hit a similar bump in the road, stock market crash, and they cut government spending by 50%, did a lot of the things that should have been done here, and we never heard about the Great Depression of 1921, but we're certainly going to be hearing about the Great Depression of 2012 or 2008, whenever they name it, for the rest of our lives. I'm sure of that one.
Yeah, you could make the case, and we can't know this for sure because you can't go back and replay history with different choices, but you could make the case that in 2000, when tech stocks crashed, had we responded the way that we did in 1921, in other words, if we scaled back spending and started living with our means right then, we would have had a couple of hard years, but we would have wiped out so much bad debt in the process that we would have come out of that viable, possibly. And then we could have skipped the 20 hard years that we've got ahead of us. And, but we didn't. We see the difference between now and then is that we have a printing press now. So the government responds to bubbles bursting and other kinds of financial trouble with more debt. We pump out a lot of money in the system, get people to borrow more. And so we get through the immediate trouble without as much apparent damage as there would have been otherwise. But the cost is a whole bunch of new debt that then makes the next problem even bigger and more serious. And so we've done that several times in the last 20 years. And we've ended up with way more debt per capita and as a percent of GDP than we had back in 1929. Yeah. And so that makes the right policies, that is, wipe out the debt right now and start with a clean slate, that much more painful. So we would have to see something worse than any 2-year period that we've had prior to this in order to get rid of enough debt to make us a somewhat healthy society again. And no politician who has to go through an election in the next year and a half is going to allow 2 years, the worst 2 years in our history, to happen while they're in an election cycle. And we're always in an election cycle. So they will never choose that. And as long as they've got a printing press, they will always choose to print more dollars or, electronically create more dollars and dump it into the banking system in the hope that they can delay the day of reckoning. And this will go on. We can do this as long as the world wants dollars. Yeah. As long as people think dollars have some value, we can play this game. And so the end game is when people lose faith in the dollar. And again, there's no way to predict the day that happens. But as the amount of debt that we take on with each new quantitative easing gets bigger and bigger, the more people around the world realize that this is basically a con game. And that we're giving them worthless pieces of paper or computer bits in return for real stuff. And they're not going to get their value out of this. They're not going to be able to convert their dollars into real things that are worth more than the stuff that they gave us for those dollars to begin with. And at some point, that we reach a tipping point where enough people believe that they all bail and everybody runs for the exits at once and the dollar just falls apart. And that ends the game for us. Well, and, it's amazing that it hasn't happened yet when you look at the numbers. So There's no way to know how long it goes on.
So we're the sickest country in the world except for all the others.
Yes.
And that, like you said, it can't go on indefinitely. It just can't keep happening and expect a happy outcome. Whether the other currencies die before the dollar or they manage to hang on, eventually they're going to be coming for the dollar. At that point, it's kind of game over.
Yeah. And so that really is the question, like you said. Maybe the other currencies go first, because the Eurozone with its design flaws that we've already talked about, and Japan with its government debt that dwarfs our government debt, they could go next. And China has all kinds of internal imbalances because they're so opaque. We don't really know about them, but we can kind of infer them from a lot of things, like their ghost cities and their local authorities and regional banks that have all kinds of bad debt. They have things that could blow up too. So it could be that you have several things happen in the next few years that actually make the dollar stronger, but it's an illusion. Exactly. Because it's just people being even more terrified about someplace else than they are terrified here about us. And in the end, that just makes our crash that much bigger. It delays it for a while, but when it comes, it'll be like nothing we've ever lived through, certainly.
Yeah.
And very hard to predict.
Yeah, you have to always remember that if you're in a panic, if you're panicking, if you haven't accepted the situation and prepared for it, and you're just left out there, then you're going to go running for shelter. But the shelter that you might be seeking could be ground zero for the next financial bomb. To me, China's balance sheet, China's system is a lot like our banks' balance sheets and financial statements. If you looked at the balance sheet, it looked great. And you had to read every single note to have a glimpse of what was coming down the road with mortgage-backed securities and now with derivatives. But just looking at the overall picture to the outside world, look great. Oh, they're growing, their equity's increasing, they're increasing the dividend. And now look where we are. They're all insolvent. And I think every sovereign in the world is insolvent. They're just showing it in different ways. And that's kind of where we're at. On that cheerful note, John, where can people find you and learn more about you and read your writing?
I run dollarcollapse.com. That's www.dollarcollapse.com, which is kind of a blog / news aggregation site for the stuff that we just talked about. So, show up for an hour in the morning and you're kind of up to speed on the dark side of the global financial system.
And like I say, at financialsurvivalnetwork.com, we're always posting John's writing on our site. And John's old friend of the show, going way back to when we had just a few hundred listeners scattered around. In fact, I don't even know where they were. They just seemed to download for some reason. Now we've got tens of thousands. And John, thank you so much for being on and being a part of the FSN community.
Well, thanks, Gary. Enjoyed it.
Hey, we'll talk to you again soon.